And now even storage is turning out to be a big problem where WTI is selling cheaper than water.
That's true. Storage is the new barometer for the oil market, really. What we're seeing with the storage hubs in the US, like Cushing, and the fact that they're going to be filled up in 3 or 4 weeks, that's a real problem, and it's going to keep prices under pressure. We saw that with the rush from the OPEC Plus agreement to try to stem the tide. It was too little, too late, and the time you've got the US and Canada trying to get on board in the G20, it was all a bit after the horse had bolted. It may not have seemed that way from an oil market perspective, but don't forget that this deal hasn't even come into place yet. That comes into place on May the 1st. Then after that, then you're going to have the production coming down. And that takes time to get that production down. So even if it was it wasn't big enough. The cut, even though it was unprecedented and huge, it wasn't enough, and it was also too late. And then as a result, you're seeing this stock build. In the US, it's a particular problem because, like the commentator said, it's landlocked. It's hard to get it out of the pipelines to the ships. And then you've got storage in Europe and Fujairah and Singapore. These hubs are not quite full. They've still got a little bit more flexibility, even though they're all contracted out. But it's filling up fast, and at Platts Analytics, we see it filling up by the end of May, regardless of what's happening here. And the result, prices will stay under pressure. We see prices staying in for Brent. We see prices staying in the 10 to 20 range for the next quarter, and they're going to continue to stay under pressure until it finds a home. What you have to remember, I think, which is unusual in this case with COVID-19, is that under usual circumstances, when you have a demand crash, when you have a recession, lower prices will incentivize demand, and in the same way, higher prices will curb demand. But in this sense, there is no demand because regardless of low prices, who wants to buy oil? The airlines aren't flying, the cars aren't running. It's a fundamental problem, and no matter how low prices go, it's harder to find those buyers right now.
Yeah, so let's take that conversation forward. We never thought we were going to be discussing that the barrel was going to be the barometer, the storage facility would be the barometer. Per Magnus, let me come to you now. I hope first up, you, your family, your entire team is safe, healthy, maintaining social distancing. If I could just talk to you about crude prices, like I said, it's turning out to be cheaper than water when I look at WTI. The Brent is also barely hanging on to $20 a barrel. You've seen cuts that have been announced by the OPEC Plus. But if I continue to look at the May futures and the June futures, it indicates that perhaps this pain is going to stay with us all through May, and only in June could we start seeing an upside in crude oil prices. Am I correct in my reading?
Yeah, I think that still we will see the worst coming. So, but what we have seen now, what happens when the floor in the oil market disappears completely. And what we saw in the United States now, which is the world's largest oil market, they are consuming 20 million barrels of oil every day in America. And now they have very severe lockdowns across the nation. So the demand is severely down. Refineries, they have to stop the runs now because the product storage is full. And once the refineries are reducing their runs, then you see a drop in crude demand. And the storage in the US was quite high already. So what happened with the future contract was that in May, you cannot guarantee to have any storage in Cushing. And also the storage is full almost at the Gulf Coast. So there is no way to transport oil out from Cushing to the Gulf Coast because that is also completely full. So that's why it was not possible to have any physical delivery guaranteed in May. And what we saw now is a start of what we are going to see in other parts of the world because storage is filling up in the rest of the world. We have 27 million barrels lost of demand. And now the refineries are cutting down to balance the market. And then you see the crude storage filling up very fast.
Okay, now that we've done with the initial and the state setting part of this conversation, Paul Hickin, you said storage is the new barometer. Give us an idea what's happening. Are storage vessels available? Have prices gone off the charts? We all read these stories, for example, about how Indonesia has got 3 tankers in the ocean and, it's not accepting the deliveries, trying to renegotiate prices. For India, an oil importer, it's fantastic news, and we're still trying to figure out a stimulus package and all of that. There were some reports that India may be getting cargo on 2 leased tankers over the weekend. Give us a sense of what's happening there. First of all, are prices completely off the charts? And are there any tankers and vessels available?
Well, there's 2 parts here. First, the floating storage angle, and secondly, specifically to India. So if I answer the floating storage question first, yes. Now, what we're seeing is basically there's 2 levels. There's the inland storage, first of all, which that is filling up, but there's still some space across the ARA in Europe and elsewhere. There is some little bit of space across in the world for inland storage, but it is filling up fast. And that is why you're seeing the more expensive option, which is putting crude and oil products onto ships. We're seeing that especially with jet fuel, because people without flying, it's more expensive fuel, and that is being put onto floating storage. And you're seeing, what you'll see is probably around 400 million barrels fuzzy storage available. Because remember, a lot of these ships, they're going from destination to destination. There's lots of it. It's not always clear whether they're actually floating or whether they're taking oil to one place to another. But what you can say from Platts Analytics, we see there's probably about 400 million barrels available storage, and coming up to about 50% of that is being used up. And there is some wiggle room, but there are people putting on long-term contracts for floating storage. We're seeing some unprecedented numbers there. And also freight rates are spiking high. And that is also, there's a jostling between the incentivizing of putting crude onto ships. And secondly, it's a bonanza for oil tankers in that sense. So there's that option. And what you're seeing is that we still have some wiggle room in terms of from floating storage. So, but it is filling up fast, and within the next 6 weeks or so, it's going to look pretty grim, and that's why prices will stay under pressure. Now, from the perspective of an Indian consumer perspective, it's a little bit more complicated than just being a good news for India. Yes, it can buy some crude for strategic reserves. It will need to buy some for its refineries. But you've got to remember, like the gentleman before me just mentioned, refineries are cutting back runs. Demand is collapsing because of the COVID-19. And what happens is people aren't buying oil regardless of the price. So while there is going to be some purchases from an Indian consumer perspective, and while that is good news, the overall situation with the pandemic is it's still not a great situation for consumers to be in, because economies aren't working. And we see at Platts Analytics, we see demand has been obliterated. April and May are particularly bad, but you're going to see up possibly around 7.8 million barrels a day demand lost for the whole year. It's going to take some time to get back to that level as well. So it's a grim situation, and I think all round. And I think it's when storage does start to fill up by the end of May, June time, then you're going to see even further shut-ins, not just on a refinery level, but also in the actual upstream side. It will start becoming, with prices staying low, it's going to start really testing the higher cost producers, particularly in Canada and in the US, but elsewhere as well.
Even Joel Hancock, the oil analyst at National 6, now joining us here on ET Now. Joel, thanks a lot. Never thought we would see the day that we saw yesterday. Or are you part of that camp that knew that this negative would be seen against the WTI? Today we're of course hearing all these news reports about how major American oil producers had started introducing new clauses in their contracts, the likes of ExxonMobil, that in case you hit zero, in case you hit negative, the buyer would still have to take the crude, is not going to be incumbent anymore on the seller.
It's really an interesting and a historic day yesterday, obviously, with WTI closing around minus $37 a barrel. Really, I mean, our view in-house is really this is a lot to do with the technical characteristics of the WTI futures contract. Not too much liquidity yesterday, admittedly, only around 120,000 lots compared to 870,000 for the more actively traded June contract. So a lot of what we saw is owing to illiquidity. But really, I mean, it's due to the kind of physical delivery aspect of the contract. And what became increasingly apparent yesterday was just that there's very limited storage capacity at Cushing available. That's kind of not quite the opposite of the weekly DOE stats, which suggested there was still some wiggle room, but it seems that that's kind of fully leased. And so with no real option to take delivery, we just saw longs exiting positions and significant selling pressure, really. Our view is that we're not going to see this repeated in June. We think we're going to see a huge volume CapEx cuts and production curtailments actually announced across the North American upstream space in the next couple of weeks, which should alleviate some of the pressures that we saw during yesterday's contract expiry. So definitely a historic day, but definitely not the new normal.
Paul Hickin, let me come to you now. How is this an opportunity for an oil importing country like India? Yes, we of course rely far more on Brent. So we are now currently seeing Brent at around $20 a barrel, right? We have 3 strategic reserves in the country which are owned by the sovereign. How is this a big opportunity? I understand that low oil prices is never good in the long term for the global economy, but this is going to turn out to be a golden opportunity for importers like India.
Yeah, I mean, while demand has taken a hit, it's still it's for importers. This is a good it's a positive, and you got to remember when they had this OPEC Plus agreement and they were talking with other G20 countries. Most of these were importers like India, and when you've got that, they may support price stability. They may support OPEC in a loosely worded comments, which they did do, in terms of price stability, and no one wants to see, like you said, the boom and bust. But apart from that, it's actually read between the lines, and it's a positive. And India looking to fill up their strategic reserves. They have limited strategic reserve capacity. There's about 50% full, I believe, and there is some opportunity to fill that up as well at low prices. So there is some positives to be taken from a consumer country perspective. And but the question is, how long will it last? And I think the problem is with storage running out, and there's little sign of things really getting back quickly. China would be the first one people to look at in terms of a big importer and a big consumer, and how and the first ones that go into this to a pandemic will be how quickly it leads the economy out and how quickly prices could potentially recover. But it's looking bleak for the next few months.
It's looking bleak for the next few months. I'm reminded about how, for example, leading pundits in the oil and gas markets have said this. When Fatih Biroli was with us in an interview, he said, forget April. It's going to be a black April. The big question now is May going to be as black if you're an oil producer? Paul Magnus, let me come to you. And, taking off from where I left off with right now with Paul, for an oil importer like India and others, are we already seeing renegotiations that take place? You're seeing Brent fall. Look what happened with the WTI. The obviously the negotiating power would, I would imagine, be with the oil importers. And is that what is happening, or is that not really happening also because you're simultaneously seeing a pressure on just not enough storage facilities, not enough tankers?
Right now, of course, this is a fantastic buyer's market, but I think we should be aware about the long-term consequences of this, because the drop of investments, the curtail of production, it will cause a cycle in 2 years from now that can be very strong. So an importer like India, I think it's important to have a stable oil price. When it dips to these extreme low levels, you get too little investments to ensure production going forward, and demand will come back almost to the same level. But supply will take some time before it can go back to the same level. So we might be heading into a tight market 2 years down the road. So I think that should be an importer's thinking to stabilize oil prices is very important. And the global economy suffers a lot when oil prices is at these extreme levels. There are almost 100 million people depending on oil jobs directly or indirectly. And many countries are exporting oil, and they will have extreme drops in GDPs. So everything is correlated to each other. So I think it's not in the interest of an oil importing country to see these extreme low cycles.
Okay, Joel, let me come to you now. And I want to expand on this part, because all the viewers that are tuning in, we are in India, they want to know what's going to happen. We're still waiting for a stimulus package. I'm sure in the corridors of power are figuring out how they have extra elbow room when it comes to fiscal calculations and all of that. But we rely primarily on Brent. And with what we are seeing, the pressure on Brent, is this just a case of investors fearing that panicking when it comes to the crude market at large? You're also seeing a panic in the equity markets on Wall Street at the moment. Or is today also an indication that, yes, May will be a pressure point for crude oil at large, WTI or Brent, whatever's been announced by the OPEC Plus, the cuts are not going to be enough? Because if you're going to see that kind of pressure on Brent, it should be good news for India in the short term.
Yeah, I'm sure. Although yesterday was definitely a localized WTI event, really related to the technicalities with the expiry in the physical settlement. Really, even it was a symbolic event more than anything, with most of the liquidity in the June contract. But really, what symbol does it give? It gives a sign of a market under severe physical stress. Futures markets have been detached from the physical over the course of April, really, with kind of significant weakness seen across physical grades in the North Sea, in the Med, and inland US as well. And so the picture isn't particularly positive for oil prices through April and into May. Simply, people aren't moving. Demand has completely dried up, which has been well covered with your previous commentators. And so the pressure today shouldn't be particularly surprising on the Brent market. We are just going to have to almost suffer through another few weeks of really severe downwards pressure on pricing, and really to kind of get back to a more positive level in the near term, it's going to require supply curtailment at a relatively high level, at an unprecedented level, we think. So this is primarily going to hit your kind of inland onshore producers. We're looking at US tight oil producers who can respond relatively quickly to price signals.
Right. So let's see what's in store for us. But I'd like to thank all three of you gentlemen for joining us on the special edition of us figuring out what's going on in the crude oil markets. Thanks a lot for your expertise. With that, it's a wrap.